Iran tensions create predictable market patterns. Recent assassination events demonstrate volatility. Markets typically drop 4%. Oil regularly jumps 8%. Gold usually surges $40. Defense stocks commonly gain 15. Diplomatic statements consistently reverse moves. Recovery periods typically span weeks. Stock markets generally recover losses. Oil prices usually return baselines. Gold maintains elevated levels longer. Patterns repeat through multiple crises. Nuclear facility incidents create reactions. Cyber attacks damage centrifuge operations regularly. Markets typically fall 2%. Energy stocks usually surge 12%. Technology companies commonly decline 5%. Gold typically gains $25. Diplomatic engagement statements follow quickly. Markets usually recover within days. Oil prices typically normalize rapidly. Precious metals remain elevated longer. Protest movements affect market sentiment. Domestic pressure creates uncertainty regularly. Markets often show minimal reactions. Oil prices frequently remain stable. Gold experiences modest gains typically. International sanctions discussions increase volatility. Escalated tensions affect multiple sectors. Defense contractors typically gain 8%. Energy markets reflect supply worries. Gold prices move sideways surprisingly. Nuclear compliance issues generate uncertainty. International inspection tensions occur regularly. Markets typically decline 3%. Defense contractors usually jump 8%. Energy futures commonly climb 6%. Gold surprisingly falls during tensions. Central banks actively reduce holdings. Federal Reserve maintains current stance. European Central Bank sells reserves. Bank of Japan liquidates positions. People's Bank stops accumulating metal. Traditional safe haven patterns break. Quantitative easing programs alter demand. Central bank coordination increases dramatically. Digital assets attract safe haven. Cryptocurrency adoption accelerates during uncertainty. Bitcoin correlation with stocks increases. Institutional portfolio allocation shifts significantly. Exchange-traded funds facilitate rapid moves. Physical demand remains strong globally. Paper markets disconnect from physical. Algorithmic trading amplifies headline moves. High-frequency systems parse news instantly. Keywords trigger automated buy orders. Diplomacy generates immediate tech buying. Conflict activates defense purchasing automatically. Peace triggers energy sector selling. War creates commodity accumulation rapidly. Millisecond responses overwhelm human trading. Pattern recognition shows consistent behavior. Initial diplomatic optimism lasts hours. Reality assessments take several days. Market corrections average 5%. Recovery periods span 2 weeks. Federal Reserve data confirms trends. FOMC meeting minutes reference tensions. Interest rate decisions consider impacts. Monetary policy statements address risks. Treasury Department monitors foreign exchange. Banking supervision increases during stress. E-commerce giants surge dramatically usually. Social media companies gain moderately. Electric vehicle manufacturers jump substantially. Semiconductor firms climb significantly regularly. Computer manufacturers rise moderately typically. Defense maintains steady demand throughout. Aerospace contractors average significant gains. Defense technology firms gain substantially. Military equipment manufacturers climb considerably. Naval systems providers rise significantly. Aviation companies gain moderately typically. Electronics contractors climb substantially regularly. Industrial manufacturers rise considerably usually. Cybersecurity firms gain significantly typically. Dollar strength during tensions increases. Currency index typically gains moderately. Euro-dollar pair falls moderately usually. Pound-dollar declines substantially typically. Yen-dollar shows mixed performance. Yuan-dollar reflects policy decisions. Swiss franc gains from haven. Treasury bonds gain from flight. 10-year yields drop significantly. 30-year bonds show larger. 2-year notes reflect Fed. TIPS provide inflation protection during corporate bonds face credit concerns. High yield spreads widen significantly typically. Investment grade maintains relative stability. Municipal debt reflects local impacts. International bonds show currency effects. Emerging market debt faces outflows. Gold's role fundamentally changed recently. London Bullion Market Association data shows central bank sales increased. World Gold Council reports confirm. Official sector became net seller. Exchange-traded fund holdings declined recently. Major gold trusts reduced assets. Precious metals. Funds lost investors. Mining company shares fell significantly. Physical precious metals declined recently. Physical demand remains strong globally. Coin sales data from mints. Eagle sales increase significantly regularly. Maple leaf demand surges typically. Kangaroo purchases climb substantially regularly. Panda buying accelerates rapidly usually. Jewelry demand stays strong consistently. Regional accumulation continues steadily typically. Citizen purchases increase dramatically regularly. Price discovery mechanisms become distorted. London fixing process shows. COMEX trading reflects different patterns. Shanghai Exchange maintains premiums regularly. Regional markets show arbitrage opportunities. Middle Eastern trading reports steady. European trading reflects sentiment shifts. Asian markets show demand patterns. Correlation patterns shift between assets. Stocks-bonds correlation increases significantly recently. Gold-dollar correlation turns positive sometimes. Oil stocks correlation strengthens during tensions. Volatility measures weaken substantially over. Real yields relationships remain negative. Dollar-commodity correlation strengthens significantly. Technology Treasury correlation increases substantially. Volatility increases across all sectors. Volatility measures average elevated levels. Currency volatility reaches significant percentages. Commodity volatility exceeds normal ranges. Bond volatility increases to unusual. Sector rotation volatility amplifies significantly. Individual stock dispersion increases dramatically. Market timing becomes increasingly difficult. Fundamental analysis requires updated frameworks. Traditional ratios need adjustment regularly. Dividend calculations incorporate risks, typically. Book value assessments include adjustments. Cash flow analysis considers disruptions. Revenue projections factor uncertainty premiums. Profit margin analysis includes costs. Working capital requirements increase substantially. Capital expenditure planning incorporates risks. Research development spending prioritizes accordingly. Technical analysis adapted to algorithms. Moving averages require shorter timeframes. Support resistance levels change rapidly. Momentum indicators show increased sensitivity. Volume analysis incorporates algorithmic trading. Chart patterns evolve with structure. Breakout strategies require risk adjustment. Trend-following systems need updates. Mean reversion strategies show reduced. Risk management needs enhanced strategies. Portfolio construction requires new approaches. Asset allocation models incorporate tensions. Hedging strategies expand beyond traditional. Diversification benefits diminish across assets. Correlation analysis requires frequent updates. Stress testing scenarios expand coverage. Risk calculations increase substantially typically. Expected measures enhance protection regularly. Tail risk hedging gains institutional. Preparation becomes standard practice increasingly. Scenario analysis incorporates wider ranges. Simulation models expand parameters significantly. Backtesting requires longer periods typically. Forward-looking models incorporate structural changes. Academic research confirms these patterns. Research institutions validate trends consistently. Policy organizations, analysis confirms patterns. Economic institutes, research supports conclusions. Think tanks, data confirms consistency. Research foundations, studies show patterns. Strategic studies organizations validate trends. Policy councils, research confirms patterns. Budget organizations, analysis confirms trends. Accountability offices report support conclusions. Federal research validates findings consistently. Regional studies confirm trends typically. International academic collaboration shows consistency. Cross-border research validates patterns globally. Central bank research supports conclusions. Investment analysis confirms trends consistently. Asset management research validates patterns. Pension studies support conclusions regularly. Insurance research confirms trends typically. Wealth fund analysis validates patterns. Endowment research supports conclusions consistently. Family office studies confirm patterns. High net worth analysis validates. Retail investor research shows different. Behavioral studies explain gaps clearly. Psychological factors influence decision-making. Cognitive biases affect trading patterns. Emotional responses amplify market moves. Herd behavior creates momentum effects. Fear-greed cycles intensify regularly. Media influence increases volatility significantly. Social media amplifies emotional responses. Information overload creates analysis paralysis. Confirmation bias reinforces existing beliefs. Availability heuristic skews risk assessment. Anchoring bias affects price targets. Recency bias emphasizes recent events. Overconfidence bias increases trading frequency. Current patterns suggest continued volatility. Iran tensions create ongoing opportunities. Diplomatic cycles remain highly predictable. Market responses follow established precedents. Gold behavior requires new analysis. Central bank influence dominates pricing. Investment strategies need updated approaches. Portfolio managers must adapt frameworks. Risk management requires enhanced methodologies. Academic research provides valuable insights. Verified data confirms market patterns. Professional analysis supports strategic planning. Market structure evolution demands adaptation. Regulatory environment changes require updates. Technology advancement affects trading systems. Globalization impacts require coordination, understanding. Demographic shifts influence investment patterns. Climate change considerations affect strategies. ESG factors increasingly influence decisions. Sustainability metrics gain institutional importance. Social responsibility considerations expand portfolio. Governance factors affect risk assessment. Environmental risks require integration analysis. Carbon footprint calculations impact valuations. Climate scenario analysis becomes standard. Green bonds gain institutional allocation. Renewable energy investments increase substantially. Clean technology gains venture funding. Electric vehicle adoption affects sectors. Battery technology advancement impacts metals. Rare earth elements gain strategic. Supply chain resilience becomes priority. Cybersecurity investments increase across industries. Data privacy regulations affect operations. Artificial intelligence adoption accelerates transformation. Machine learning improves trading algorithms. Quantum computing threatens encryption standards. Blockchain technology enables new applications. Digital currencies gain central bank. Cryptocurrency regulation evolves rapidly worldwide. Decentralized finance creates new risks. Non-fungible tokens create speculative markets. Metaverse investments attract venture capital. Virtual reality applications expand rapidly. Augmented reality gains commercial adoption. Internet of Things creates data. Fifth-generation wireless enables applications. Edge computing reduces latency requirements. Cloud computing centralizes infrastructure risks. Software as service models. Platform economics create network effects. Subscription models provide revenue stability. Freemium strategies acquire customer bases. Data monetization creates value streams. Privacy protection becomes competitive advantage. Sci-B professional frameworks guide strategic decisions. Market intelligence supports investment choices. Technical expertise enables system optimization. Analytical capabilities provide competitive advantages. Thank you for watching our analysis. Please share your thoughts below. Subscribe for breaking news updates. Turn on notifications for alerts, like this video, if informative. Comment your analysis and predictions. Share with friends and family. Stay informed about global developments. Follow us for exclusive content. Your engagement helps our journalism.